Welcome to Trading Lounge and the Asian report for the 24th of July, starting with the ASX on the daily chart here. As you know, we're looking at these 5 waves as wave 1 and 2 here, and 1, 2, 3, 4, 5 for 1 and 2 here, and third wave here. We'd been working through an ABC correction here for wave 4, and now we'll be looking for wave 5 heading higher, certainly above the 6.8, but somewhere in between 6.8 and the 7 area there. Right, let's dive in and have a bit of a look. So on the 4-hour chart here, as you may know, we're looking at, just open this up a little bit. So we'd been looking at an A wave here, a B wave here, and a C wave here, a perfect sort of model really, where we had 5 waves in the A wave here. So we knew that we would be coming back up to the 61.8% mark and then having 5 waves down in wave C here. One thing that I do want to point out here is that and I do mention this a lot, when the market, say, moves up here, the A wave is normally the quickest down, and then the B wave and the C wave is on a bit of an angle here. And that kind of tells you that it's reluctant to go down, and you know, we can start positioning ourselves or getting ready for that. So it worked out really quite perfect here. We understood this. I understood most of this. It got a bit complicated in here, and I got it wrong in here a little bit. But the 5 waves down here wasn't a problem, and now we've been looking to go long on these lows here. Also too here, I want to point out, I've been very conservative in my count here, where I've got wave 1 here and wave 2 here, then 1 and 2 and 3 and 4 in here, and going up for wave 5 here for wave 3. But I think that will expand out a bit further than that, in that this move, if I can just, this is how I've got it on the hourly chart here, but I think just looking at it visually here, I think it will be more like this here, with a 1 and 2 here and a third wave coming into play here with a 4th wave and a 5th wave up here for wave 3, sending wave 5 higher here with wave 4 here. I think it's going to be a little bit like that, but I don't want to get hopes up, but we are long at the moment, and we'll just stay with that, but we'll just wanted to point that out, that's all. So I've counted it conservatively here, so wave 3 here, the A, the B, and the C wave here. You may have been long in this point here, or even this one, but you should be long on the breach of this one here at least. So like I've mentioned, I've counted this up conservatively here, but I don't think that's the case. So I think that this, I just need to do some work on it. It's wave 1 here and wave 2 here, but I'll just leave it that for the time being. With this here, we can move this up now to, I'll just leave it out the way here, okay? Because it's just not finished, so we just don't want to be, you know, we don't want our ticket clipped by the market makers. So yeah, look, we'll just cruise on. The thing here is that well, we're heading into group 2 here, so we know that there's going to be some type of, you know, correction within group 2 here, and there's certainly going to be a reaction at 6.8 here. Well, we've got the old high here anyway, so that's just going to come out and play, isn't it, from that particular point. So be mindful of that. If you wanted to take profit, well, then that's a nice place to take profit from, you know, perhaps not 50%, but maybe even 30% profit. So what we'll do is we'll look at and we'll try and get back in as well, you know, with this here. So I'll just copy that here. in group 2 here. If you don't want to do it there, you can do it at the other one a bit higher up, but in that case we'll be looking to take 50%, if not more, at that at this particular high here. But if that's the case, we want to be able to look to get back in on any pullback within this space here. I'll just have a quick look at the tick chart. I don't know if I've updated that or not. Nope, I haven't. So and I've got different labeling here as well. It's okay, but this few things need to change here. I won't bore you to death here with this. I just need to shift everything up 1 degree higher here, so I won't drag you through all of that, but it's just not finished, that's all. So it doesn't really matter. Just there'll be the thing is that there will be wave 4s. So so from wave 4 situation, we can just leave the stops need to be under the 38.2% retracement level here to go higher from that point there. I'll just have a quick look at the US while I'm here, just to see what we're going to be pulled. We're going to be pulled around by the US market. So just while we're here with the US markets, it does appear that we've got wave 3 here with an A and a B and a C here for wave 4. We can have this up for wave 1 here, looking for a pullback for wave 2 across the 3000 level here, and then we can go along from there. The only spanner in the works here is that this wave 4 can pull down to the 2950 area here, and that means that this here would be I've got some over here. Just need to be a little bit mindful here with this, because that's why I'm looking for that particular setup here. This can be the A wave here. Then this can also be a little A wave with a B wave, little B wave here, and a C wave here for this wave B here, and then move lower from that point. So we just need to be a little bit mindful of that. I'm just updating this because I'll need to talk about this in the US video. But so we can have a top in play here and then have 5 waves down through here. I don't think it's the case, but it's possible. But it doesn't really matter our trading in the US market. It's just that we're looking for a correction across this level here to give us a setup to get into this third wave here. Let's move on to India and Hong Kong. So with India here, I was looking at, this is a weekly chart, so wave 3 here with an A wave here, B wave here, and a C wave here for an expanded flat. So we're looking for 5 waves up here. I mean, at first glance, it looks like we've got 1 and 2, and a 3rd wave, and a 4th wave, and a 5th wave, but we've got all this cacophony in here. So I think that we've got the 1 and the 2 here, then 1 and 2 and 3 and 4 and 5 for the 3rd, and coming back for the 4th. That can pull back to the wave 4 of 1 lesser degree, or the 38.2% retracement level, and then wave 5 to the upside there. So with that in mind, we'll go to the daily chart here. So wave B down to wave C to make wave 4, wave 1, wave 2 here, wave 1 and 2 here. So these were complicated, so we're expecting these to be simple. Normally if wave 2 is simple, then wave 4 is going to be complex, but we can see in this instance here that wave 2 is complex and wave 4 is simple. So I'm assuming this is complex for wave 2 here, and wave 3 will be a simple ABC correction here. And like I said, the 38.2% retracement level is here where it is now, and the wave 4 of 1 lesser degree is down here. So yeah, that's what we're investigating here at the moment. But it could possibly be a top in play here, because maybe this can be counted differently within here, but I'm just sort of staying with this for the time being. Let's go into the 4-hour chart here, And so from wave 3 here, we're looking at an A and a B, and then 1 and 2 in here, and 3 here, and 4 here, and 5 here. So these 5 waves here are just about finished. So we'll go into the hourly chart here. This will be going along from here will be a very high risk trade, but we're looking down as 1 and 2 and 3 and 4 and 5 here to complete this structure here. So we just may get a bounce from this point, you know. Normally what we'd be looking for here would normally be looking for 1, 2, 3, 4, 5 here, and then an A and a B and a C coming down here. So that's what we'd normally be looking for, and we can use that there as well. So we have to wait for that first high to come in play, and I'm just assuming it will come in around these old highs here. It may come in earlier than that, but that's something that you can look for to move in from that point. But you could also move in from this low here as well. So if I just look at this tick chart here, I mean, it's risk at this particular point. Obviously, we've come down quite strongly here in that, let me just, I mean, it would need to look at this being, could the corrective move back up here, would need to look at this as wave 1 here, and wave 2, and wave 3, 4, and 5 here in this case. So pretty much taking this top out here is what we're looking for. So in taking a top out here, it normally goes through a process like this here. So I can't draw on this side of the tick chart, but I can draw over here. So let's just imagine, I can just draw down here. So let's just say that that's the line here. The market will come up to this and it will hit it here, and then it's coming back up to this one here now. It's going to struggle here, but it should pop up and give us that first high above the level there, a bit like this one here, but we never got a previous high to trigger that one there. So that there, once we got that first high above the level there, then you know, let this do what it needs to do, and if it moves through after that, then you know the reason for what makes this safe is because of all of this structure here, because it's migrating from being resistance to being support here, because currently it's at resistance here, isn't it? So it would need to move up here, then come back and see if it's, you know, do its little thing. That's where the battle is, and then if it moves up from that point, then you know that the buyers have taken control at that particular point. But at this stage, it could certainly move down further from this, but it's certainly ending here. What's happening here, this structure was long, this one is relatively, you know, smaller, and then this one here is smaller again, and you could say that this one here is smaller again as well, but I think this is the first impulse to the upside here, with an A and a B and a C either into here or in this structure here. But I could be totally wrong. I mean, normally we do get a nice bounce off 300 here. Obviously, if this becomes the resistance, well, then we'll be moving down lower from that point, and that's certainly on the cards as well. I'm just pointing out a very high risk trade from this particular point, but you do need that setup there. Okay, so I've explained that, and that setup would be pretty much on there, but you need that setup properly established within that point there. Otherwise, if you don't want to do that, that's fine. You could even make that a half a position here, so it's not so full on here. There we go, reduce the risk by 50%, and rightly so. If you can reduce it further, that's fine. There's plenty of space to get in here. I'm just being a little bit cheeky here, but we should see some sort of bounce off here, and then we'll need to work out if it's, you know, 5 waves up from that particular point. Okay, let's have a little look at Hong Kong. Hong Kong, to be honest, I don't know the wave count. It's just, every time I look at this, there's too many holes in the wave counts. It's too messy. I just can't see it. So I don't know. And this is why I've been talking about the market bouncing around the 61.8% levels here. So it's reached it. I mean, this here looks corrective to me, but hit 61.8, 61.8, 61.8. The other next one is down here at this point here, so it can certainly still come down to that particular point. I'll just go back to the hourly in this case here. There is a case for being bullish, as I mentioned before, with wave 1 and 2 here, 3, 4, and 5 here for wave 1. This does count as corrective down here. So it's fine as wave 2. We could look at this as wave 1 and wave 2 here as well. But it's just as easy to have it reversed here. But the reason I've got it this way now is because if I had wave 1 here and wave 2 here, then wave 2 is too big in terms of time and amplitude for wave 1 here. So it just doesn't make sense. It could be a B wave. So I'll just put this back here. It could be a B wave, and we still have this to come down here further with 1 and 2 here and 3, 4, 5 here. That's still on the cards as well here for this market. So we can have it rejecting. This is 61.8% down. This is 61% down up. So we can come down here for 3, 4, and 5 here to finish that off there for a larger A wave, B wave, and C wave here for this wave 2 here. So that's possible as well. I just don't know. But what I have been doing is tracking that 61.8% as the market bounces around a lot. And one thing I do want to point out here is that between the levels of 500 here, right? 508, so 1, 2, 3, 5, and 8, the Fibonacci numbers. So between number 5 here, which this market is trying to do at the moment, isn't it? It's found it as resistance here, pulled back, and then it's created that first high above the level here. So what that does really is it brings us into, if I can borrow that gives us a trigger here now based on the 500 area here. Sure, it might drop lower from here, but we can still leave that trigger there. The other point that I want to make here is that between the 500 and the 800, the halfway mark for that brings us into the lower end of group 2 here, the middle of those two, the 65 here. So 28,650. We could also put the 72 in here, the 28,720 in here. Close enough. So that all becomes group 2 here. So this level here, though, the 28,650, the halfway mark between 800 and 500 here, if that becomes the support, it's the resistance. But if it becomes the support, then that's also another position we can add to through here. And of course, we can also add through on the 72 and also the 8 at that point as well, because if this gets triggered here, then this is going to get triggered here. So we'll be definitely going up from that point. I just don't know the wave count on that, and yeah, you've seen me struggle with it for quite some time. I just haven't had the time to look at it, that's all. And yeah, so don't worry anything about the wave count. All we're focused on at the moment is that this 28,650 becoming the support. If that's the case, well, you can see the resistance through here. And this is not support here. See, the way that this moved up through here, the breakout's important, but the retest is just as important, if not more important. And if that retest had succeeded, then we could have gone up from that point and taking this high out and that high out and been long from those points. But that's what we're looking for over here. We're looking for that support on those levels. But if you wanted to get in quick, and we'll just put that to half a position here as well, and we'll leave it at that for the time being here. But yeah, I've got it labeled 1 and 2 here and 1 and 2 here because the only other thing that this can possibly be here would be a B wave sitting here with a C wave coming down here for 5 waves with wave 1 and 2 here and 3, 4, 5. So we're still at a very important junction here, and yeah, like I said, I don't know. We just need to still continue to wait. I feel like we haven't missed anything because, you know, all this bouncing around the 61.8 from the daily chart, the weekly chart to the daily, to the 4 hour to here, it's been like a big triangle pattern, and we've just been basically zooming in a very odd way. You wouldn't see it as a triangle, but basically it's just been doing this here, and we're just with triangles. Triangles are normally on really low volume, and that means that they don't need, they reach a balance point in here, and they don't need a lot of volume to move either way. I mean, if the market has come from down below here and created the triangle, then it'll break to the upside. If it's come down this way and it's created the triangle, well, then it's a continuation pattern. It's going to break to the downside here. So yeah, but they're on very light volume, and they don't take a lot of volume to move it very swiftly, and people know when they're broken out and they're all piling in at that stage. So that's kind of what we're looking for in the bigger picture. It's just a very rough draft of it all, but in a nutshell, that's what's happening to the market. So anyway, enough waffling. Thanks for tuning in. Much appreciated. Cheers.